Hello, everyone, and welcome back to Sudden Wealth. I hope you're having a very good day today. And if you do enjoy my content, please consider dropping that subscribe and like. It actually helps quite a lot the channel, so thank you very much. So today I'd like to discuss basically the potential for the next collapse coming from the banking side or commercial real estate. And all of these things ties into a liquidity crisis. Now, in my opinion, I don't think they will cause any of this for one simple reason. Everyone is looking at it. So everyone is talking about in traditional financial media or in social media, including YouTube, is always the same story. Banking collapse, commercial real estate, the end, blah, blah, blah. Now, so let's start with the first one. Commercial real estate. It's true that with the situation that happened in 2019, 2020, 2021, the way of working has changed completely and forever, in my opinion. So I do think we have too much commercial real estate space for the actual needs of it, which means that there's going to be two options. Either they need to be repurposed for residential, which is already happening, by the way, and the other one is there's going to need to be some restructuring on some of these developers who have too much commercial real estate exposure, and because everyone is aware of the problem, and the problem is around $1 trillion in the US in size. What I think is going to happen is over Q4 2023 and up until Q2 2024, a lot of restructurings of debt are going to happen, as well as a lot of repurposing of existing commercial real estate into residential forms of it. And the reason why this, in my opinion, will not create a major issue is because everyone is aware of it, so everyone can plan for it. It's not what you know, it's not what you don't know that hurts you, it's what you know for sure that happens to kill you at the end. Meaning, tech bubble, buy the NASDAQ and everything goes well. That was the problem. Number two, buy real estate. You can never go wrong buying real estate. The banking is very strong in the US. Boom. Those were the reasons. So that's my point. When everyone is seeing something, then that thing doesn't happen. Okay? Then the number two is the banking collapse. So in Europe, the situation was different with Credit Suisse because that bank, if you check public news, was involved in every scandal you could imagine, and things were going terribly, consistently, large impairments and losses. You name it, they were involved. In the US was different. So what happened was between 2009 and 2021, interest rates were very low. So banks accumulated a lot of government debt, mortgage-backed securities at extremely low rates. Okay, so when the rates went higher, those bonds that they previously bought are now worth much less. Why? Because you can just go buy a new bond with a new interest rate, which is 3 or 4 times or 5 times the previous one. So why the hell would you pay for a 0.5% bond if you can get a 3% a new one? The only way you do it is if you buy the 0.5% one at a huge discount. But there's an accounting gimmick in banks, which is if you have assets which are supposed to be held to maturity, meaning, let's say if you buy a 10-year bond, 100 million, you get interest every year, and on year 10, you get everything back. Then you don't need to report paper losses. So basically, if the value of those bonds go up or down, if you would need to sell them right now, you don't need to report it, okay? Problem is, no bank in the world has enough cash for all its deposits. Just doesn't exist. So what happens is, if enough people withdraw cash, then the banks will be forced to sell these bonds, and now the paper loss becomes a real loss, which is actually what happened. Now there's a mechanism for banks called the discount window, in which they can call the Fed and say, hey guys, we are experiencing a huge withdrawal in liquidity. Can you please open the discount window, which is basically an emergency liquidity line, so they can fetch it without needing to sell all those bonds. So that was what I would do, and I'm surprised that they didn't do it. My feeling is, look, the US has too many regional banks compared to the rest of the world. It's very inefficient. So my feeling is that the idea is if some of these collapse, they will just either disappear or be absorbed by bigger ones. Now, if the bigger ones go into trouble, I do think they will be saved, just to be clear. And they will have these mechanisms like the discount window to avoid going into issues. Now, there were also other people withdrawing cash and putting it into money market funds, for example. And also, this also creates a bit of a meme stock mania, but the reverse. So basically, when GameStop ran, everyone was looking for the next GameStop. Like, a lot of short interest, a beat down company, not so big float, etc., to push it to the moon. So in this case, it's different. It's okay, which bank is the next one to collapse? If I find it, I can short it and make a lot of money. So that was the thinking behind it. But when they start to short it, the stock goes down, so depositors get concerned, so they take out the cash, so they have losses, so the stock goes down, so more people withdraw cash, so they need to sell more of the bonds, so more losses, so on and so forth. So you create a bit of a downward spiral, which is then very difficult to stop. So taking into account the liquidity measures that can be put in place actually same day, basically, and they've already done it. The Fed increased its balance sheet by 600 billion during that period. I don't see the banking collapse as the next big reason for a crash. I would be more keen to think things around AI, because everyone is so bullish on it. So that's usually a good sign for something to go wrong. Or things that people believe that will never fail, like government debt. Because one of the reasons with these higher interest rates, that to me, it's still unclear how it's going to be, is, for example, the US still has massive trade deficits and budget deficits, which is money they need to borrow. By borrowing it, they pay higher interest costs, which means the interest payment gets a bigger and bigger chunk of the budget for the next year and the next year. So it's going to get to a point where I don't think nobody will want to lend it anymore, because there's no way they're going to have surpluses soon. So I'm not sure how these higher interest rates will work when we get to a certain point. Let's say if debt goes to 45 trillion, maybe that's the breaking point. I don't know. It's too soon to say. If you start predicting too far ahead, you end up sounding like a Peter Schiff or like a Harry Dent, and basically you predict crashes on a yearly basis. So, but I would expect something of that nature. So something that people are either all bullish or that they think that it's not possible to ever happen. You see? But, just my opinion. It's going to be interesting to see what they think. But if everyone is saying, oh, this is going to be the cause, and everyone is agreeing with it, then that doesn't happen. It's just how markets work. So, thank you very much, and I'll catch you in the next one.